What happens when the US government puts its data on chain and CFTC also drop bomb? Welcome back, folks. Time to catch up with the market on SoSoValue Crypto Daily. All right, let's kick things off with a look at the market. We're seeing a nice little green wave today. The total crypto market cap has climbed 1.1% over the last 24 hours, pushing us up to a cool $3.96 trillion. Bitcoin is leading the charge, up 0.8% and now trading around $112,200. Ethereum took a tiny breather, dipping just 0.2%, but it's holding strong at that $4,480 level. But the real star of the show, you guessed it, Solana. Sol absolutely rocketed up more than 5%, hitting a new half-year high. You love to see it. Now, for our top story, and believe me, this one is a bombshell. The US government is officially stepping onto the blockchain. In a landmark partnership, they're teaming up with Chainlink and Pyth to publish key economic data. We're talking GDP and PCE numbers directly on chain. This is massive for transparency and solidifies the US's goal of becoming a global crypto capital. This data will be available simultaneously across 9 different blockchains, including heavyweights like Bitcoin, Ethereum, Solana, and Avalanche. So, what does this mean? Chainlink and Pyth are acting as the oracles, which are basically secure bridges that bring real-world data like stock prices or economic stats into the decentralized world of crypto. The market reaction was immediate and explosive. Pyth's token went on an absolute tear, soaring nearly 90% at its peak, and Chainlink's token, jumped over 5%, getting very close to its previous highs. This whole move is part of the Trump administration's big embrace of blockchain, especially as people have been questioning the reliability of old-school economic stats. This isn't just a tech upgrade, it's a fundamental shift in how we access and trust financial information. Next up, we've got some major regulatory news from the CFTC. They've just opened the door for overseas crypto exchanges to legally serve U.S. customers through a framework called the Foreign Board of Trade, or FBOT. For a long time, the U.S. has been a tricky market to navigate, but this is a huge step forward. It's part of a wider crypto sprint to create clearer rules. What does this mean for you? Potentially more liquidity in the market, more exchange options, and it might just tempt some of the big players who left the U.S. market to come back home. It's a fantastic sign that regulators are working to build bridges, not walls. And if you're looking for some bullish sentiment, look no further than Wall Street. JP Morgan just released a new analysis, and their top line is that Bitcoin is currently undervalued. That's right, one of the biggest banks in the world is saying BTC has more room to run. Their analysts argue that based on its historically low volatility and the flood of institutional money, Bitcoin should be trading around $126,000. And they think we could hit that level by the end of the year. They're seeing Bitcoin's volatility get closer to gold's, and they expect institutions to start allocating funds to Bitcoin just like they do with gold. This is exactly the kind of market maturation we've been waiting for. Finally, we've got a story where crypto, business, and politics all collide. Reuters is reporting that the mining firm American Bitcoin is finalizing a merger to get listed on the NASDAQ this September. Here's the kicker. Hut 8 will own an 80% stake, and 2 of President Trump's sons are expected to own the other 20%. Since it was founded in March, American Bitcoin has already stacked up about 215 BTC, worth around $24 million, and just closed a $220 million financing round. This move not only gives Hut 8 a new angle for growth, but also marks a deeper dive for the Trump family into the Bitcoin space, perfectly aligning with the administration's pro-crypto stance. That's a wrap for today's update. Catch you tomorrow, same time, same place. Cut through the chaos. Focus on what drives the crypto market. Stay on top of crypto research, all in one place at SoSoValue.com.